one, what was step one? Is basically just working with accounting profit and working towards tax profit. So what I want you to do is do an exercise, I think it's example 24. So what you're going to do is you're going to add back your accounting, what? Expenses, and subtract accounting income. Okay, we're going to add tax income and subtract tax expenses to get tax profit. Okay. Just remember that you're only actually doing that for any expenses or income that are different. So if you've got accounting expense, which is 10,000 for salaries, and for tax it's 12,000, then obviously you're going to add back 10 and subtract 12. Okay. If you've got say electricity, which is 20,000 for accounting, and it's also 20,000 for tax, you don't have to do this because you don't have to make that adjustment. Obviously it's going to make no difference if you add back 20 and subtract 20. Yeah. So basically all you're doing is taking your accounting profit from your income statement, making adjustments, getting your tax profit and multiplying that by 30%. And then once you've got that, you then put through this journal entry. So this journal entry doesn't have any deferred tax in it. It's basically just debit tax expense and credit current tax liability. Question I've had is isn't deferred tax liability the same as current tax liability? And is it? Would you say that you can interchange current tax liability and deferred tax liability?
No, because current tax liability is what you owe to ATO.
Okay, so this is what you owe the ATO. Based on a tax profit, this tax profit has been calculated in line with the tax rules. Okay. Remember that this is basically one of the steps. You can do them in either order. I'll call it step one. Step two is then doing your deferred tax, and that's where we do the little tax, the table, temporary differences. And what we end up with is the deferred tax journal entry. So DTA, DTL, and then we have a tax expense. So what I keep saying to you is, when we do this step, which is step two, we're changing only your tax expense. Oops, I haven't done that very well. So we have this journal entry, okay? And when we do this table, all we're doing is getting the tax expense, getting the tax expense in line with, or back in line with the accounting profit. Okay. We're then recognizing either a kind of accrued tax, in other words, we paid too little tax and we should accrue some, or we're recognizing a prepayment of tax, in other words, we've paid too much tax and we shouldn't have paid so much, and therefore we're recognizing an asset. Okay. But you can see that we're not changing the amount that we owe the ATO. There is no debit or credit here to current tax liability. That remains the same.